Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Market-wise, let's take a look at it out here. We have the Dow Industrials down 17, Nasdaq's flat. S&Ps are off $1.50. Gold contract down $1, trading at $1,207 an ounce. Silver up 12 cents at $16.53 an ounce. Platinum up 14 at $1,240 an ounce. Copper up 4 pennies at $2.93 a pound. Light sweet crude down 69 cents at $66.68 a barrel. Bonds. Everready bond market, folks, going topside once again. You get the 10-year up 7 ticks, 126.16. 30-year up 22 ticks at 141.30. King dollar down 335 ticks at 88.91. Bottom line, the King dollar, we're going to bisect and dissect that baby for sure. King dollar, folks, tested the highs of June of 2010 yesterday. I expect that's about it. It got up there today and come off those highs with some juice on the way down. Euro up 63 ticks, trading out at 123.74. The yen is flat at 119.76. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Cash S&P, we've made it to 2077. Gets over all the highs. Right now, you're at 2071. And I'm going to show you something in the futures market because this is so cool, folks, okay? And this is what you have that, you know, as I walk you through this is pretty cool. So what we had happen at, I believe it was 12:30, right? Yeah, it's 12:30. Inside the E-minis, okay, so that's the S&P 500, which a lot of people trade, let's put it that way. At 12:30 this afternoon, you got a spike, a 7-point spike. We did that 7-point spike with 95,000 contracts. What that spike specifically did is this. Takes out the highs of yesterday, and when you get a 7-point move in about 1 second, it's pretty amazing. It was 95,000 contracts. Okay. Now, my take on this is that was the spike to do two different things. And watch how this is. This is a heads you win, tails you win that we're going downtown. This is what it is. Your first scenario goes like this. Your first scenario is that you get an institution that's going in the market and wants to take all the stops out at the highs, and their stops, the stops that are getting taken out, are the institution's short positions. That's one way of looking at it. Because no one really knows what that is, okay? The second way of looking at it is that you have an institution that wants to spike it over the highs to basically put the S&P up 20, 30 points. Bottom line, they spiked it over the highs, gave it up in spades ASAP. That, if in fact there were more buyers on top of that, that would have drove that baby up like it drove oil down when oil crashed, like when gold crashed on the way down. That's what that was all about. So what does that set up from this point on? Well, and we've got it, by the way, okay? So you got the spike over the high. Then what happens just before I got on the air at 14:30, well, 2:30, you got the first downdraft coming in. So we've just gone from 77 to 71. And what ends up happening here is that more than likely what we're going to see coming into the close, we're going to end up somewhere around 67, 2067. We get that, and we get that with some juice. That I'm not just banking on that. I want to show you something else. That is telling me that that high is in. We're going south, and we're going to go south with real conviction. Now let's go over to the dollar. The dollar index that has been going step for step with the S&P got to a price point out here today of 89.43. Right now we're at 88.89. The dollar index also spiked, and it was the exact, well, it was you talk about a spike. It was a nice spike at 0830. Now, that's when the dollar index opens, by the way, folks, in the futures market, 0830. Then what you had is that someone sold into it big, and they sold 1,700 contracts. We've only done 10,000, so they sold almost, 17% of the amount of trades that are out there. And guess what? They sold it all the way down. Now let's go to the continuous contract. Because the continuous contract, folks, is what it has been trying to do for one full month. And it did it. It did it yesterday. It got into the high yesterday. And the number is 88.80. And right now, guess what? You have a failure. You're at 88.67 right now. And if we close tomorrow under 88.51, that's going to be a failure. That means that the run in the dollar, this 7-month run in the dollar, is going to pull back. What we don't know at this particular point is that, okay, is it a normal pullback? Is it the end of a run and you're going to basically, do a 5-month trend on the way down? We'll get a better understanding of that, how the first pullback comes in. Because if we come off that high with volume, that's going to say a much larger correction is coming in. Now let's go over to the bond market. We take a look at bonds. So the ever-ready bond market, folks, just won't give it up. And bonds continue to scream that lower prices are coming in the S&P, higher prices are coming in the bond market, lower yields are coming. 10-year right now is up 7 ticks. We've done 986,000 contracts. So what you have again is that they just can't knock it down, man. I mean, they should have been able to knock the bond down to 125 easy. Bottom line is that they can only get it to 126.04. We are trading at and inside, well, at the bar of the October 15th spike. And that 129 wants to get hit. That's in the 10-year. We go over to the 30-year, and the 30-year is leading the bond market, period, leading it up in an extraordinary way, actually. The 30-year right now is up 22 ticks. We've done 274,000 contracts. The 30-year is well into the bar. We're at 141.01 is the low, so we're almost a point into the bar. Bottom line, these bonds want higher price. That's saying the S&P wants lower price. Dollar index has topped. Gold has bottomed. Silver has bottomed. Oil. Let's go to oil. Oil is going to be a tight one. So oil. We take a look at, we get over that oil market. Okay, so oil right now is at 66.71. We've done 213,000 contracts today. So oil is saying it wants to do a bounce. Pretty cool. That 213,000 contracts is going into 500,000. Oil hasn't got any traction yet, but that's saying, guess what? There's no more sellers down here also. Our phone number is 877-927-6648. Let's go to Tom in Tampa. Hey, Tom, what's going on?
Blue skies today, bluer tomorrow, man.
That's a beautiful thing.
Love it. Sure
it's gorgeous, and our Lightning are doing amazing, man.
Man, they sure are. You gotta love it.
I'm telling you, right across the country, folks, if you want to see great hockey, when the Lightning are playing, watch them, okay? Because we have not only just 1 or 2 great guys on that team, it's almost like 5, 6, 7. Someone gets hurt, they bring someone else in, and they're even just as good or better than the next guy, man. It's a mind blow.
Absolutely, they got quite a chemistry.
Don't they?
Yeah, they really do, and that's what it takes, man. You just can't have one standout. Like the Marlins signed that baseball pitcher to some $360 million contract. I don't know, man, what are you guys on crack down there or what, man? How are you going to do it? They found that out in San Francisco with Barry Bonds, man. One player can't do it.
No, that's a fact. No doubt. So Big Blue, Tom, right?
I'm sure. It is a little bounce out there yesterday. This thing still, it's got to be looking just as bearish as it has been since October, right?
Yeah, it's Big Blue can't get anywhere. Even so the low yesterday, well, the low for the last year rather is 159. The high's 199. You're trading at 164. Even with the Dow power into highs, the S&P power into highs, this hasn't been able to get anywhere. It had a spike of $2.50. There's still no action here, man. It looks to me, this is building a large ABC down, man. And, this is pretty intense, folks, because the way Big Blue gapped away, okay, we gapped away the week between October 12th and October 24th. It's been trading down at these levels for 6 weeks. That's building cause for another gap away down. Stocks don't like to gap once, This is building cause, for a much lower price, man.
Okay, great.
Cooking, brother.
Thanks, John.
Have a great one, man. Have a safe one. Dow Industrials right now are down 20. Nasdaq off $1.50. You got the futures off 150. Gold contract is flat at 12.08. Silver is 16.53. We're going to be right back, folks.
Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about The Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive The Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on The Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rose, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Dow Industrials right now down at 34. Nasdaq's off 5. S&P's off 3.5. And that 2067 is going to be coming at you, folks. It's going to get interesting here, watching how this whole thing is shaking out. That little spike is basically screaming that that little baby was it. And we'll see how it gets into the 67 right now. Actually, we're at it right now. What you'd be looking for is you're looking for an expansion of volume. You get an expansion of volume. See, because whatever institution did that up there, what will end up happening, they're going to whack this thing. Whack it. Boom. Now, folks, let's go over to our man, Mr. Andy Heck. Don't forget, each and every Tuesday and Thursday, right after my show, 5 to 6 p.m., Andy has an outstanding show. Look at this. Oh, my God. They are whacking at the other side. That was quick. Dow's down 49. Anyway, Tuesday, Thursday, 5 to 6 p.m. Eastern Standard Time. Andy has an outstanding program right here at TFNN. Now, all the programming at TFNN, folks, get it right on your cell phone, tfnn.mobi. You can also watch Tiger TV. On Tiger TV, you get the audio plus the video. You just go to TFNN.com, hit the video. You'll see the Tiger TV on the right-hand side. Hit that, brings it right up. Andy's got a great newsletter. It's the Technomento Commodity Report. What Andy does, he puts in the commodity market, puts the fundamentals together with the technicals, matches them. Great newsletter. Test drive it right now, absolutely free, 1 free month. Go to newsletters, trading newsletters. You see the Technomento Commodity Report right there. Andy Heck, what's going on?
How you doing, Tom?
Doing great, man. You having a good day out there?
Yeah, having a good day. The sun finally came out in Vegas after 3 straight days of rain. I think we're done for the year, though.
Wow, that's unusual, right? Yeah,
I kind of like it when it happens because it's definitely different. Listen, there's 2 things I want to talk about today.
Okay.
First thing is, I've noticed lately, volatility is up big in these markets.
Yes.
Look, we're seeing it in oil.
Right.
We're seeing it in gold and silver.
Yep.
We're seeing it in natural gas across the board.
Yes.
And one thing we have to remember, that, risk and reward is a function of volatility.
Right.
More volatility, great opportunities for day traders, for traders,
different
for
ball
investors.
Game. Right.
But we have to adjust our risk profile and our reward profile based on how volatile the markets are. So we need to kind of be prepared if we're going to trade now to take a little more risk and look for a little bit more reward.
It's faster fingers, there's no doubt. And what happens,
Absolutely.
folks, this is what's so cool about volatility. Well, this is cool, let's put it this way, if you're either a swing trader, not if you're a long-term trader, because volatility, folks, equals markets that are down. And they bounce dramatically higher very quickly too, and that's what they love to do. But the reality is that it's a trend down. Or inside the commodity markets, what it is that it's a trend up, and then you'll bounce down, and that'll be fast price destruction like we had Sunday night, but yet they couldn't hold it down. The gold goes up $80 and silver goes up $2.50, $2.20 after being down $1.50. So you get the opportunities in the middle of those that are extraordinary. Whether you're a bull or a bear, you just better make sure you take your money. That's the bottom line.
Yeah, that's right. You got to be nimble and you got to be fast,
Yeah.
but you got to be careful. And you have to trade with stops, but you have to adjust your stops according to the market's volatility. Otherwise, you're just asking to get stopped out over and over again.
No doubt. No doubt.
So listen, I want to talk a little bit about precious metals here, Tom, because I think tomorrow is a key day in precious metals. And they're all setting up very interestingly here. In gold, in silver, and in platinum, we're setting up for a key reversal, a bullish key reversal on the weekly chart.
Yeah, which is huge.
Let me give you some numbers here.
Okay.
On the weekly gold chart, a close over 1203.80 will be a bullish key reversal. We are currently at 1208, so we're above there.
Right.
In platinum, a close over 1231.40 will be a bullish key reversal on the weekly chart. We're currently at just over 1240, so we're above there.
Yes.
In silver, and I think silver's the most important because silver let us down, and if we're going to go back up, silver's going to lead us up.
Yeah.
1669. We're
at 53. Oh, my God. And we're at 1653 right now. Okay.
Exactly. So we're within a stone's throw, and we got a crazy Friday coming tomorrow. So watch these levels because, we've had a lot of key reversals on daily charts.
Yeah.
But a weekly chart key reversal could be really telling us something. And if as you said, the dollar comes off here, that could really cause some action. Now, if we don't get these key reversals, we'll probably go to sleep for the rest of 2014. But we get these. It could make the balance of December very interesting indeed for these markets.
Yeah, and I'm at the camp right now, folks, that December is going to be a shocker in the context of most times, I'll go to the broad market right now. Most times in the broad market, it's very hard to bring the broad market down when, in fact, we've been up so dramatically. these reversals that we're talking about here seem to be, we're not talking in one indice, okay? That's what's so cool. It's like the only thing that has been steady, well, the S&P has been steady, you know, the market going up. About what we, steady to me would be, with price, with volume, would be the bond market. That's been consistently wanting to go higher, pulls back on lighter volume. The dollar did the same thing. The dollar, you know, hit what it should have hit. So it's going to be intriguing now to see how do you come off those, and you know, what are those correlations going to be? You know, so
exactly. Now let's take a look at natural gas, because that is a wild ride.
That is no doubt a wild ride.
On November, let's just take a look here. On November 21st, we traded at 468.90. 8 trading sessions later today, we're down at 365.40. Okay?
Yes.
Now, this thing has been trading off weather forecasts. But in my opinion, and I know technically it looks terrible here, and this is where my fundamentals come in. We're in the season of draws. Natural gas is trading like spring and summer are 2 weeks away. They are not 2 weeks away. This is overdone here. Could there be some more downside in natural gas? Absolutely. But I am a scale-down buyer of natural gas futures here and things like UGAS here, because I think that this is overdone, and we're just, you know, a few sessions, maybe 1, maybe 2, maybe 10 away from the next cold snap, which will take these things higher. We're going into this winter with lower inventories. I know technically it looks terrible.
Yeah.
Chart-wise, it looks terrible. It looks like an island reversal, you know, on the charts, because there's a gap on the way up and a gap on the way down. But, you know, remember, what's today's date? December 4th. It's too early to sing the death knell for natural gas that there won't be a cold winter.
Let me pull this up on a continuous basis. So on a daily basis, no doubt, you know, breaking that swing is selling me. Well, I guess I get 310. We're at 360. You know, that's pretty intense, I guess.
I'm a scale-down buyer every 10 cents from here. Goes to 310, it goes to 310. This is again, it goes to what I said about risk-reward and volatility.
Yep.
And, you know, you have to widen your risk profile a little bit, because the rewards can be enormous. Look, over the last 11 years, we've gone into the winter season with natural gas inventories lower than the 11-year average 4 times. The lowest high price in those 4 years was $8. Now, I'm not saying we're going to $8 here, but I am saying we're going a hell of a lot higher than 365.
Yeah, you stay right there. We're going to be coming right back. Sure. This is Andy Heck, Tom O'Brien. We appreciate you growling and prowling with us out here. Dow Industrials right now down 58. NASDAQ off 13. S&Ps are up 5.5. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials are down 43. NASDAQ is off 10. You get the S&Ps off 4.5. Gold is flat out there at 1208. And, folks, if you happen to want to be in the metal market or in the metal market right now, if you come over to TFNN, right on the front, what you're going to see is that the Gold Report is celebrating its 660th edition. That's going to be on December 16th. We're doing a special right now. You can get 60 editions for only $600. That's a 50% savings. We're going to do the special for 2 weeks. So if you're a subscriber right now, great deal. You can renew. If you are a new listener, or Tiger or Tigress that want to subscribe, it's a great deal. What you also get is you get a signed copy of The Art of Timing the Trade. We just got another printing in. That's an $88 value. So you can check it out on the front page of TFNN. Andy Hecht.
Hey, congratulations. 660 editions. That's
Isn't that crazy?
That's a lot of work.
Isn't that crazy? 12 and a half years. That blows my mind.
That's a lot of work.
You know what really blows my mind is that it's gone so quick, And then what I always do at age, I fast forward to 12 and a half years. I say, oh, my God, that's scary. It's like, oh.
It is. It's time goes really fast.
Man.
It's amazing.
It does.
I think we realize that the older we get. Let's turn back the clocks a little bit here.
Okay.
You know, Tom, the last major infrastructure project in the United States was really the year I was born, 1959, when you were a young, strapping lad.
Yeah.
In Boston, and it was the Eisenhower administration, and that, you know, in the late 50s, that's when the U.S. put a lot of money, a lot of effort behind building roads, bridges, so on and so forth, infrastructure.
Yes.
Now, with oil prices coming off, there's some movements out there saying that we need another major infrastructure project in the United States to build some of these decrepit roads up, fix the bridges. And some politicians are suggesting that, you know, since we have this huge tax cut in considering the oil prices dropped from over $100 a barrel
interesting.
down to,
I see what you're saying. It really isn't a tax cut. It's a commodity cut, but people say it's a tax cut. I got it. Okay.
Right. So the idea is to pay for infrastructure with increasing taxes on energy. And I tell you why I think it's a little dangerous, because you assume that the prices are going to stay down here.
Right.
That's the assumption on that one. I mean, well, we definitely need infrastructure rebuilt in this country. There's no question about it. You know, I see it in the difference between Nevada and California. Nevada has huge tax receipts from the gambling industry.
Okay.
So the roads here are good. The minute you drive over the border into California, the roads are not so good.
Really? Interesting.
Yeah, lots of potholes, lots of difficulty. But, you know, I'm in the camp here. I'm expecting a vicious bounce in crude oil to the upside.
Okay.
It's getting too bearish here. You know, as many as people as we heard calling for 120, 130 when we were up at 107 in June, we're hearing them now say, you know, 60, 50, 40. It's getting too slanted to one side. And as I said, volatility's picking up in these markets. And don't be surprised if you wake up one morning and crude oil is, you know, up at $73, $74 a barrel, like in a flash.
No, I can definitely see that. There's no doubt about that. That'd be a normal bounce, too. You know?
Exactly. I mean, not so much, but, you know, there's ways to play this. Nothing goes in a straight line. Crude oil has gone in a straight line from June, pretty much.
Yeah,
this thing is in desperate need of a relief rally.
Well, it's going to be, you know, like I was saying a little bit earlier today, that the aspect of crude right now is pulling back with lighter volume, but it can't get away from that price. So it better get away from that price pretty quickly. Do you know what I'm saying? That's what it really comes down to.
I agree. But, you know, you get down to a certain price and the selling dries up. You know, you're seeing volume dry up. You're seeing open interest is not what it was.
Yes.
You know, it comes to a point where markets run out of selling. You know what I mean? And it could be a speculative lift or whatever, and it might come back down. But right now, it's been so overdone after this OPEC. The dust is settled. You know, the OPEC meeting was a week ago now. Like, you know, all of the effects are in the market here. And look, physical crude has been trading, you know, it traded below $50 a barrel up in the Balkans.
Yeah.
So,
hey, if we can figure out, all you have to do is, you know, yesterday, Andy, I was talking about this, and so check this out. Folks, right now, if you could really figure out how to get the oil out of the Balkans into some tankers and just lay them in the Gulf of Mexico for, you know, 6 months, man, it would be dynamite. You know, because that, you know, they did that. Morgan Stanley did that in 2007, 2008. You know, I saw the tankers. I saw 2 of the tankers out there. It blew my mind, man. You know,
they just stored it.
Yeah, they stored it 35 miles out in the Gulf. You're going out there. This old tanker is out there, just sitting there. And, you know, and I asked another fisherman. He says, "Oh yeah," he says, "These are the oil tankers, man. They're just paying. You know, they pay for the tanker, of course. You got to pay the lease rate, but then you just leave it there until it's worth money."
Exactly, Tom. And you know what? If you look at market structure, it is reflecting that trade now. For example, you have January crude is at $66.71 a barrel.
Okay.
Right?
Yeah.
Crude in January 2018 is at $73.81.
Yep.
That's about a $7.5, $8 differential.
Right.
I mean, that's much higher than interest rates. It's reflecting the storage.
Interesting.
So if you own tankers, if you have that stuff, you have an advantage in this trade.
Right. That is so cool, man. Yeah.
Right, and because we're awash in crude oil now, all of a sudden, I mean, we were awash in crude oil back in June when the thing was in a huge backwardation, and we talked about this back then, that that market was starting to move from backwardation to contango. We moved from a $15 backwardation on that spread to a $7 to $8 contango. That's a $23 move.
You know what's wild about oil is that, I mean, they think, that gold that gets volatile. I mean, oil has crashed, that last crash, the $35 is insane. So, I mean, the other side of it is capable of crashing too, right?
Oh, right. But look, that wasn't the first time. Look at what happened in 2008 when we had the financial crisis. Oil went from 147 to 38.
I know. That's what I'm talking about, right?
Yes.
That's unheard of. That's insane.
Absolutely possible. But
right.
I just don't see it this time. You know what? Because everyone's looking for it.
Yeah. No, I get it there.
The psychology of markets here a little bit. I think we're gonna.
Hey.
I think the other thing is, by the way, if you're right and the dollar starts weakening a bit here, that's not going to be negative for crude oil.
No, it's not. In fact, you know what you had out here today, too, folks, and again, this is so cool. And the headlines of the Wall Street Journal, if you go look at a journal today, the headlines: "Dollars gain is Europe's pain." It's like, oh, thank you, God. I saw that when I woke up this morning. I was getting my newspaper, in my driveway, and I says, oh, look at this, man. So what that specifically means to me, folks, a technical basis, it was testing the high yesterday. It didn't fail yesterday. It failed today. Well, I saw that on a fundamental basis. I says, oh, this is heaven, man. When it's on the front page.
It's a great title.
Yeah, it is, and it's on the front. It's the headline news. It's like, okay, this is... right, because, of course, when you read that, folks, people that aren't in the marketplace are going to try to start buying the dollar, right when it's going to pull back. You know what I mean? It's like, okay.
Exactly. Well, you know what? The dollar goes up, the dollar goes down from here. Europe is still, it's going to take a lot to erase their pain. And a lot of their pain is coming from the fact that, they're a big trading partner with Russia, and these sanctions are biting at Europe much more than they're biting at us.
Yeah, there's no doubt. There's no doubt. And they, listen, hopefully Europe can straighten itself out because they get big problems, man. Between Putin and between getting overrun, they got problems, man. They haven't addressed them.
They have a lot of problems on a very macro basis for a very long term that, are going to reverberate through those economies, not for months to come, Tom, for decades to come.
Well, they already have. In Europe, folks, okay, Europe's a great place, but Europe, the first time I remember going to Europe, and it wasn't that long ago, maybe 76, 78, I realized that, you read the history about it and you have the elites and all that, but there's still plenty of people in Europe that they actually think they're elite, period. And that's what took me more than anything. I said, this is really interesting, man. And that structure in itself, that social structure that you have the elites and then you have all the slaves, it's like, hold it, man, that doesn't last forever. It just doesn't. You know what I mean? And
those empires disappeared long ago.
Well, they did, but what I think what kept them alive, meaning kept the middle class alive, and even some folks that didn't have any money, is that the ownership structure in Europe, meaning that, let's say it was our generation's folks, our grandfathers and grandmothers would have been having small cottages or summer places and all this, which had a lot in Europe, without debt on, so you could not make a lot of money and still have that vacation. Do you know what I mean? That's what I saw over this. This is interesting. How does a normal family own little vacations and they don't have to work for 7 or 8 weeks? Do you know what I'm saying? And that's changed now. That's changed in the last 20, 30 years because guess what? If you don't do work, you're not going to be able to afford those places, And then there's a social fabric that happens after that.
Absolutely.
Andy, you have a great one, safe one. Of course, we look forward to speaking for your show coming up at 5 o'clock tonight.
See you soon, Tom.
Okay, man. Have a great one. Have a safe one. Come right back, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Not all gold stocks are the same. This offer is valid for current or new subscribers. All the details are on the front page of TFNN.com. The sale will be over before you know it, so act now and lock in this incredible price by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now down 30. Nasdaq's off 7.5. S&Ps are off 2.5. Let's go over to take a look at RAX. That's Rackspace Hosting. They deliver websites, web-based IT systems. The low for the year is 26. The high is 46. It's at the high right now. And we take a look at this. So daily basis, what the stock has just done is it's just last 6 months, it's gone from $29 up to 46. We take this and we put this on a weekly next, and what you're going to see on a weekly is that you're coming into the downdraft that had been created the week of November 15th. Now you're doing that with monster volume. The top of that bar was 49, the bottom is 41. So what that says, number one, is that, yeah, you can get to 49, and you're at 46.84, and bottom line is saying you can get to that. 35 million shares versus last week we did 5 million. Okay, so in that context, that basically is saying, number one, it's going to give it up within another point or two. Now let's go to a monthly basis. On a monthly basis, it's about as clean as you can get, meaning that this is basically going to be a sell. Rackspace came off its high at $77. Actually went from 81. First leg down, took it to 67. Monster volume. Next leg took it down to 36. We had 24 million shares traded. Last month we only did, 24 million? No, 74 million shares traded. 74 million shares traded. I wouldn't be basically shorting this yet. A couple points higher, yeah, it'll be a short position. That's the way that is set up right now. Let's go back over to the E-minis and see where this baby's going to close out today. So what you had inside the E-minis is that you had the spike higher, which we talked about earlier. That's when it spiked, 7-point spike up to 2077. Now you got the spike lower. We got into 2065, and we got into 2065, by the way, folks, with volume. So what that's saying is that when we were first on, I was saying at 2067. Now where I was getting the 7, so you can watch how this shakes out. Where the 7 came from, and I know we're bisecting and dissecting, but it's cool because if you can do this on an intraday basis, it works the same, folks, intraday, daily, weekly, monthly. What happens on the intraday basis, you can learn a lot more about the market much quicker. So where I was going with the 2067 is this, is that is the high of the last spike low that had volume. And that's what markets like to do, whether they're going down or up. Okay, so that's where that number came from. Now, what had volume there is 60,000 shares, 6,000 contracts. We came down there, and when we got into that, we came down with 38,000. So when you look at something like that, you say, okay, you came down at lighter volume, wants to bounce again. So how do you know, or how would you speculate on a probability basis that the market wouldn't go right to the highs versus coming back to the lows? What you do when you're looking at something, now I'm going to look at a 10-minute chart, but if you're looking at a daily or weekly, what you do is always use the same time frame, and then you're looking at how are you going against the other bars where, in this case, we came down versus we're going up. And what the S&P has done, and is doing right now, is that the first level went up. We went up on 28,000 contracts. Right now, we're dealing with 5 minutes already into it, and we're with really light volume. It's 13,000. So that's telling me at 13,000 it's not going to make it. We'll shake out somewhere between the 2068, 2067. That's where this thing should shake out. So we'll see how that thing flies. Some of the Dow stocks out here. Let's take a look at some of these Dow stocks. You have American Express up 58 cents. Honeywell is down 76. Walmart's off 25. Johnson & Johnson is off 25. You got Oxy down 69. The NDX 100. So inside the NDX 100, which is we're just taking it down today, is Vipul Communications. That's down 32 cents. Wynn's getting hit. Wynn's down 674. That's Wynn Resorts. Discovery Communications is down 90 cents. Dish is off 158. If you look at BIIB, this one's really interesting. Biogen is down 698. What you have with Biogen, this is a classic. This is a test of a high, dramatically lighter volume daily, and with this one is actually a tough one, folks. And what it is this, because the amount of volume that we got is incredible thus far on a monthly, because 2 days ago volume came in like huge volume. So it's like, oh man, you got to go to the highs. It's a tough call. On the daily and on the weekly, it's saying to me it's done. On the monthly, however, it's like, oh man, you can get more than likely get into those highs. So that one is going to be it's really a tough one to call. Let's go to John in Winchester. Hey, John, what's going on?
Hey, Tom, we're in a heat wave up here in Boston.
How is it like 50 or 60?
It's 38.
Oh, 38. Oh my God, you're still freezing. Okay, so you want to look at Micron Tech, right? Micron Technologies. Okay, the low for the year is 20, the high is 36. You're at that number right now. Let's take this and put this on a weekly. So on a weekly basis, what you have that's over there, that high of... You know what I'd do here, John, is this. I know you want to short the baby. I'd wait until it's under... I'd let it come down to like 34. Let it get back under 34.85. Even though there's light volume. In this, yes, I absolutely agree that this thing wants to go to 26 to 29. But you want it inside the lower range first. You get it inside that lower range, you get action, man.
Okay, quick. Can I ask you a quick question? I sometimes have nightmares over this because I like to short stocks. But what happens if you short a stock and the company announces a buyout?
Then what would happen, you should have nightmares over it, okay? Because, well, what happens is this. So let's picture, just say Micron. So if Micron's 36, if some other company comes in and turns around and says, okay, we're going to give you 56, well, guess what? You're down 20 bucks. Right. That's a gap up versus a gap down.
And even if you don't have even if you have a stop in there?
That's correct.
So it leaks over all those people that are about it?
Well, it absolutely does. That's where it opens. And that's where you basically want to get in the option market so you can have defined risk. Because, like, if we just look at MU right now, so watch this. If we go to defined risk, you have 36 bucks, and I'll go out to, that's January. Let's just say you could go out to April and turn around and say, okay, it's going to close under, you could have defined risk. This is pretty intense, actually. For $2.75, you can be at $3.20. You can be at the money. So for 320 bucks, you can short 100 shares, and that's all you can lose. You stay right there, folks. We're coming right back.
All right, thanks.
Okay, man. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Market-wise, let's take a look at it out here. We had the Dow down 12, NASDAQ off 5, S&P's off $1.50. Gold contract traded at $1,206 an ounce. Silver up 5 cents at $16.45 an ounce. Platinum up 11 at $1,238 an ounce. Copper up 3.5 pennies at $2.38 a pound. Light sweet crude down 65 cents at $66.74 a barrel. Bonds, the ever-ready bond market, folks, just won't go down. You have the 10-year up 10.6 at 126.19. 30-year, which is leading the bond market higher, up 29.6. 32 is a full point at 142.06. And both of those folks want to go test the highs of October 15th. That high, that was the spike. Bottom line, they're going to go up and test them. King Dollar. What do we do at King Dollar? King Dollar tested its high of June of 2010 yesterday. Stayed up there. Bottom line, today failed. King Dollar down 396, 88.85. That's on the futures contract. The continuous contract, we go over to that continuous contract first. What you'll see inside the continuous contract, we're at 88.40. And, you know, what does happen is that, you know, continuous contracts, folks, they string them together. Bottom line, it looks to me, though, King Dollar did what it wanted to do, took it a full month to do it, by the way, to hit this 88.80. And what you'd get is this. Now, a further confirmation would be that we get a close tomorrow under 88.51. And right now, we are at 88.64. Okay, so that's the way that baby is set up right now. Yeah, the euro up 73 ticks at 123.84. The yen flat at 119.76. Our phone number is 877-927-6648. Give us a call, folks. We want to know what's going on in your world. In the world of the markets, let's take a look. And we got a few numbers we'll come out with first. GPS, the gap. The gap out here closed at $40.56. Right, there she is. The gap is trading at 42 right now, and numbers go like this. And the gap, okay, the November comp sales up 6% versus down 1.6. They thought the sales would be down 1.6. They're up 6%. Nice. The same-store sales gain was 4.9%. And the Old Navy comp sales are up 18%. Banana Republic, 2%. That's a good number. That's the bottom line. So let's take a look at how this sets up. So it's into the gap. The top of this gap, it's been, this stock has got killed. So it's going to go to the top of the gap now. That's what's going on. I wouldn't be don't go buying this baby, but, you know, you're going to have let me pull this 2-3 year weekly. What you do have going, the down, it's going to go to the top of the downdraft. Top of the downdraft is 42.04. That's how this thing is set up right now. UTLA, this is Ultra Salon. That closed at 125, up $1. That's trading up $6 more. It's at 129 right now, and this company knows how to make money. That's the bottom line. 129 is going to take it right up to it's where it got smoked at 128. Oh, this is going to be interesting watching this one. So check this out. This is pretty cool. So last month you had 13 million shares. This month thus far we have 3.8. We're going into 45 million. The top of that range is 128.11. Okay. Numbers in Ultra Beauty go like this. The estimate was, oh, look at this is interesting. They haven't whacked this down yet. Oh, this is going to be a good one to check out. So, net sales, fourth quarter. Let me see the third. I think they're reporting third quarter. First, we got to get third quarter. Okay, so here we go. Third quarter, same-store sales was up 9.5%. Their net sales was $745 million. The earnings per share was 91 cents. Margin is 37.8%. Nice margins, no doubt. Fourth quarter, though, this is going to be intriguing to see how this shakes out. The reason being is that fourth quarter, they were looking to do... Okay, so third quarter, I'll stay with third quarter for a second. Third quarter, the comp sales they were looking for was 7.4. They did 9.5, so they were over in the comp sales. Fourth quarter, however, it looks to me like it's going to come in lower. The estimate for the fourth quarter was gross estimate 1.1 billion, 1.01 billion. They're looking at 997 million to 1.014. The earnings per share, they were looking for 127, and they're going to come in from 121 to 126. So that's going to be lower. So I suspect what you're going to get there is that you're going to get a test of that swing high, and, you know, we'll see whether it holds. But we're certainly not going to have the volume behind that move. FNSR, let's go take a look at Finstar. That closed at $17. That's trading at $16.50 right now. And this company here had already gapped down once. This is fiber optic subsystems and network performance test systems. We bring this, we put this on a 10-year. and the stock is volume off a high. Man, volume off a high just kills a stock. So this is down from $46 to $17. AMBA. Now this is going to give an interesting one. So this equity here makes the chips for GoPro, the camera. This closed at $55.63. It's trading at $56.12 right now, so it's a flat market. Their revenue is up 42%. There's a number. There's a revenue number, huh? The estimate was 62.2. They made 65, so they're making their numbers. That's the bottom line. Let's go to Phil in Everett. Hey, Phil, what's going on?
What's Tom? How you doing today?
I'm doing great. You having a good day out there?
Yeah, having a great day.
Cool.
Just wanted to ask you about the euro-U.S. dollar trading pair right now.
Okay.
Like, I'm getting hungry to buy it pretty soon, but I don't know if it's safe yet. It had an interesting day today. It looked like it was going to have a really nice bullish engulfing candle at one point this morning, but
yes,
then it gave up a lot of its gains today, and I'm wondering if it's going to head back to a new low.
Well, the first thing is it's never safe in the marketplace, okay? When you said safe to buy it. That's, you know, okay? Now, when you trade currencies, how do you trade them? And what vehicle?
Well, I have a MetaTrader account. I usually swing trade the dailies or the 4-hour candles.
Okay. Yeah, I would do that. I would. If you're going to go in the middle of the market, I would. Because, and the way that I would do it is that you look at the dollar index, okay, is really cool because what happens is that it's the only one that you can get volume off of, you know, and it's not huge amounts of volume, but intraday it still, you know, gives you the volume. So, like when I'm looking at, I have this up right now on Tiger TV, and that spike down at the 88.44, and the dollar index wants to get hit. That gets hit, the euro goes back topside. You know, so I think the dollar's topped, and inside the dollar index, folks, the euro is 60% of the dollar index. You know, so in that basis, that's that's what I would do, man.
Well, one thing that I might bring to your attention, if you can pull up the euro again, like there's it seems to be a pretty solid trend line on the daily chart.
Okay.
Back to like the day of October 15th, the euro made a high around 129.
Yeah.
And there's like 5 or 6 touch points on that trend line.
Oh, look at that. It hit it perfectly. Oh, what a trip, man. I see what you're saying. Okay.
Yeah. And I think if we get a close above that trend line, I think the bulls are going to come back in a big way.
Okay, so watch this. This is cool what he's talking about. Huge, huge, folks, okay? So I'm going to, if you're watching Tiger TV, I'm going to put 2 separate trend lines in there. I just want to show you something because this is bizarre how this works. Here, just stay with us a second, all right?
Okay.
Okay, cool, man. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. And, folks, as you're over to TFNN, we got a great special on the gold report. It's only going to be there for 2 weeks. My 660th edition is coming up. And what we have done is this, is you get 60 editions for $600 plus a copy of my book. Check it out on the front page of TFNN. It's a half-price deal.
It's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We're talking with Phil from Merritt. We're talking about the euro. And we're talking about a couple trend lines that are out there. So what you also have, Phil, here is this, and I've seen this a lot, okay, that, you know, you first move higher in the euro, you know, came in October. That spike higher that got the euro to 128, basically saying, hey, guess what? The euro can basically do a nice counter-trend bounce. Then what does it do, folks? Gives it up in spades, big time. You know, and so, you know, what the trend line you're looking at, yeah, there's no doubt. You close over that trend line, man, and you have two different things end up happening. You not only can get up to that 128, but then that next level up there at 131 would be just a 50% retracement of the whole move down. Do you know what I mean? So,
yeah, I feel like we're getting really close to a major trend reversal in the currencies. So,
which would make sense. I mean, it's been trending for 7 months. You know, that's a long trend, man. You know, and everyone's not going to go out of business. The dollar's not going to put the world out of business. You know what I mean? So, no
definitely.
Cooking, brother.
All right, have a good one, Tom.
Have a great one, man. Have a safe one. Now, folks, let's go over to our man, Mr. Basil Chapman. Don't forget, folks, every trading day, Basil does an outstanding show right here at TFNN, 11 to 12 Eastern Standard Time, the Tiger Technicians Hour. Basil also has a great newsletter. The opening call, the way you get it, go to TFNN, go to newsletters, trading newsletters, Can test drive it 30 days, absolutely free. And, of course, no matter where you're listening, folks, remember you can get all the programming live right on your cell phone. TFNN.MOBI. If you'd like to see Tiger TV, go to TFNN.com, hit that TV on the top right-hand side. Basil Chapman, what's going on?
Hi, Tom. How are you?
Doing great. You having a good day?
Yes, I am. Thank you.
You ready for that Boston winter?
I'm ready. I am ready. What can I say?
I know. What can you say? I know. I'm going to torture you.
That's okay.
What are we going to look at?
Well, I'm showing the Dow chart, which I show my subscribers to my opening call every single day and discuss it in terms of the Chapman Wave methodology. And one of the things we're looking at is, are we looking at a market right now? And this is the question, where my theory has been for some time that if the markets generally survive the September-October decline, if there's ever a very sharp decline in that period, and then start making new recovery highs, and in this case, new all-time highs, invariably, if you look back at the charts, you'll find that the Dow and the S&P, they close pretty close to the highs of the year on December the 31st. That's exactly what happened in 2012.
Yes.
Now, all the work that I'm doing is suggesting that a lot of the sectors and a lot of the key stocks that I'm looking at have made, in the Chapman Wave, you look for the lowest, most identifiable low bar, and you merely count each successively higher peak, and you try to get to a D, but you can go higher. And so many of the charts that I've looked at are in D, E, and F in the on the peaks. Then I'm looking at it, I'm saying, I'm not sure how you can keep the market, even though it's only just a couple of weeks to go before the end of the year, how they, whoever they is, that is the question. Are they going to be able to keep this market just rotating as the strongest sectors have fewer and fewer stocks? I'll show you the IBB in a moment, the biotech sector. And some of the weak sectors remain weak, but there are a couple like the autos, Ford and General Motors and Chrysler Fiat have suddenly come alive.
Okay.
So is that a way they're going to rotate? So we've lightened up in my opening call on the long side. We have some shorts, and we're also trying to keep one or two, if we can, long positions, which look as if they might, in a sense, be market independent. But what I'm showing here is a very nice kind of a double top. It's a rectangle formation, as well as going from the 17,894 high back on the 21st of November, just missed by about a point or so, hitting that high on the 28th. This is the Dow Daily.
It's the Dow Daily. Thank you. Okay.
Yeah. And in this Dow Daily chart, you'll see that today, at one point, it looked like, oh, you're under the 9-period moving average. That would be the first time there's a close under the 9 EMA. Couldn't do it. And if I'm going to squeeze this chart a little bit so that you can see what's going on since October the 15th. Look at this. There has been just one ugly candle. That was that IBM day of the 22nd of October.
Okay.
And since then, we've not had two consecutive sharp down days. I thought there was a chance that we could do that today, but so far, here's the other thing that is so unusual. You can go back to the Dow chart for years and years. You will not find a lengthy period like this where basically on so many sessions there was a very small high and low. The parameters between the high and the low intraday were very small, and the Dow closed almost where it started. Can you believe that with all that went on today, the Dow opens at 17,910 and closes at 17,900. So now the question I'm looking at, I'm asking myself, is this some kind of period where there's a rotation going on, but there's also distribution? Because look at the way you've had such a long period with just one big spike, and then it stops dead, another spike, and then it stops dead. So I'm thinking January one has to be very careful. It might start a little earlier.
Well,
but
it is interesting
Yes?
what you're saying, that the aspect, when we've been up all year, particularly that December could get any type of downdraft. Because we really only got a couple weeks, too, right? I mean, that's the reality.
We've got very few days, very few days left. But my thinking was that there is a chance that we could have a sudden external event relationship. We saw this morning that there was an external event relationship, but then the buyers just came in. But this is also what I'm looking at. I've shown you this chart a couple of times already over the past couple of months. And that is that there's a trend line that goes back. This is a weekly chart of the Dow. And look at this. Oops, I'm moving the wrong one. I'll move this one right here. Look at this. This resistance line, what I call a repellent zone, we're right there.
Okay, I see it, yeah.
Yep, it's going to make it real easy. A Dow close into, I thought that the 17,900s would become very strong resistance with that 18,000 millennium level not being where we sliced through as we had at 16,017. Look how 17,000 went right through it.
Right.
I think we're going to stall around here, and you can see that by the action in the market as we rotate. But technically, on a weekly basis and a monthly basis, let me show you this monthly chart. There's a time formation that goes from October of 2007, where the Dow hit 14,198, pulls back, goes down to the March low of 2009, and then what happens, it goes to a peak D in May of 2011 at 12,876, pulls back to 10,404. Look at this beautiful time match. The same, I think it's 43 weeks. We're in the 43rd week right now of the same move that went from a high peak to a bottom.
That'd be wild, man.
So it's just a fascinating market. And what I said, I show you something like one of the leading sectors, and that's been the IBB, the NASDAQ biotech sector.
Right.
So I like to look at peaks and peak Ds where you've got to be a bit careful. We're in leg D right now in the daily, and we're in leg, unless it's recycled in the weekly, I've got it as an F, but the technicals are still good. So
these monthly charts look like they could be in the peak Z.
Isn't that amazing? In fact, you don't even have to look. You just look at this big, thick line here. This is the 9-period moving average, and it hasn't even come back to that period. It hasn't broken under it for 2.5 years,
Amazing.
3 years.
Amazing. Listen, folks, you can go over to our website at TFNN. You go to newsletters, go to trading newsletters. You see the opening call, can test drive his newsletter right now. Basil, have a great one, safe one. Stay warm, man.
I will. Thank you, Sam. Have a great evening.
Bye-bye.
TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Not all gold stocks are the same. This offer is valid for current or new subscribers. All the details are on the front page of TFNN.com. The sale will be over before you know it, so act now and lock in this incredible price by visiting the front page of TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow finished down 12, NASDAQ off 5, S&P's off 2.5. Let's go to Dave in Clearwater. Hey, Dave, what's going on?
Tom, how you doing, man?
I'm doing great, man. How you been?
Oh, been doing very well. Thank you for asking. I appreciate you taking my calls always.
Absolutely, man.
Quick question for you. You've been trading gas at all here lately?
You know, it's so funny. I haven't, but as soon as I saw that it was you,
man, are you serious?
I was thinking about your wife's beautiful SUV.
Dude, this thing was an absolute classic, man. I kid you not. This thing just got, yeah. Yeah, anyways, well, I don't want to hog all the time, bro, but what we've seen in the last, several weeks, you had opportunities to go long, you've had opportunities to go short. I mean, it's just shutting up nice.
There's no doubt. Yeah, there's no doubt, man.
But anyways, I was wondering if you would take a look at a chart for me here. It's just kind of an unusual one that normally don't enter this segment, but a friend of mine pointed this out, and I'm starting to like the setup on the chart. It's ticker symbol CCJ. It's Cameco Corp. They are a uranium mining company.
Yeah, let's take a look at it. In fact, folks, it's the largest uranium mining company in the world. The low is $15. The high is $25. They have this mine. It's called the Cigar Mine. It has more uranium than it's pure uranium. They pay a 2% dividend, and okay, so we take a look at this, and on a daily basis, it's beautiful. A beautiful sign of strength in this baby. On the 7th of November, goes from 1697 to 1860, 4.4 million, and then even at the highs, it wasn't breaking down when it was up there. It was actually pushing with volume. So what we're doing now is that, of course, we're coming back to that breakout point, which is 1697. Now, let's put this on a weekly, and what you're going to see on the weekly, it's doing the exact same thing. We're coming back this week, though, with a little too much volume, because hold on. Yeah, we really are. It's 7.9 versus 10.5. And then I'll flip this to the monthly. And on the monthly, what you have, it looks like she's going to, let's see, so we're into that bar, 1776. What I'd say here, Dave, you know, and I follow this stock, right? This is how you like to, this is what you like to do. So picture, folks, equities themselves always like to, not always, okay, but there's a high probability they like to come back to their breakout area. Their strength. That's 1697. So that's what we're doing right now. And on the daily, it looks a lot better than on the weekly, right? So I'd let it get back there first and reject that price. And then what I would do, I think the better trade is we look at 1776. See, that's what the danger part is. You're into that high of the low bar.
I know. That's why I didn't buy it today.
Yeah, good for you, man. You know, and that's saying, hey, guess what? I can go into that low, 16 bucks. I can get into that 15.53 again. You know, and what you could do, I know it. Hey, check it out. You know what you could do. So now what you do is you let that, we're probably right close to a Gottlieb right now, but then you let that Tiger Gottlieb set up. I mean, this could go break the lows of the Tiger that Gottlieb, you know.
Yep. And the other thing, too, from a fundamental standpoint, right now uranium's selling for pretty much below cost. And at some point in time, you know what I'm saying, some of these other marginal players are going to have to go out. I don't think Cameco is anywhere near a marginal player. So I'm thinking from a long-term standpoint, let it come in, test it, hit it, reject it. It'll probably go sideways, below cost for a couple weeks. And then I think we're going to see a return to the top of the consolidation that you see on the weekly is my anticipation.
Yeah, this is the lot. I mean, they take in $2.3 billion a year. And this is the real deal. And in particular, folks, okay, what happens in the uranium business, if you're, depending on how long you've been in the marketplace, about 10 years ago now, the uranium, there was so much pump and dump in the uranium business, okay, that it was sick. So a lot of other people got in a lot of different other stocks that they thought were going to be all right, where CCJ was the number, period. It always will, you know, the cigar mine thus far, has the most amount of uranium in the world, I believe, you know.
Yes.
And what had happened is that they had a wall that had caved in on folks, you know, and it took them a while to get that back up. But the thing is back up, so.
And then, from what I understand, that mine's in Australia, is it not?
Yeah.
Yeah, so it's in a politically stable country.
Oh,
that's, resource friendly. So,
right.
You know, there's no chance that we're going to wake up and the government's going to grab the mine. So.
No. Not even close. Not even close.
Yeah.
Yeah.
On a side note, man, it's quite the fireworks in gold.
Yeah.
Man, oh man, you long the contract?
I was long gold. I actually bought physical gold. What I did, and I was saying this in the den too. And you know, what happens, folks, is that the physical market itself. Okay, I'm bullish in gold in a big way. And you know, we sold gold at very high prices. It was a beautiful thing, and that was the first physical buys that I've bought off Tigers since the highs. It was the first physical buys period. You know, my take on gold. Now, my take on gold, folks, is that we're not going to 19,000, 2,500. My take is, though, that we get 1,550, and I'm looking and saying to myself, hey, you know, you're 1,200. I'm good with 1,200. Make 300 per ounce on the basis. I like it. You know, and maybe I get lucky and get a lot more than that. Do you know what I mean?
I think personally, from a technical standpoint, 15 is the number. But I also think with the amount of time it's going to take to get to that, you know, it's going to, because the dollar, the dollar is, I agree with you, it's topping out, but I just don't have make a real long story short, I just don't have a lot of faith in the economic situation in the ECB, and I don't think Draghi's done with easing. So I think what we're going to see is the dollar is going to retrace, go back up, test 89 again, retrace, go back up, test 89, which is going to put some pressure, and it's going to take gold some time to get going. But I also believe that economically speaking, the U.S. is continuing to improve, and at some point, probably over the next couple of years, if depending on how long it takes to hit that 1,500 number, we're going to start getting some inflation.
Yeah, I agree.
And I think that's going to help your $1,900 price point.
It is.
I think personally it's going to even go higher than that once.
Well, what you're hearing off me is this, folks, okay? And I agree. It seems that inflation is going to come in. The real key, what happens with inflation is this, is that wages have to go up. And the wage spiral has not gone up, and that's a problem, you know? Yeah. I mean, that is a problem. And, you know, you can have these arguments, folks, across the country, you know, what is a minimum wage and what is a wage? People should get paid. You know, I'll tell you what drives me crazy, Dave, and folks, okay, is this, is that you have companies on a continual basis claiming that everything is bad and they can't pay people. The bottom line, folks, companies have never made so much money, okay? That's how unions got started, just if you don't know that, folks, okay? You know, and what blows my mind is that you have normal working people defending the companies. It's like, what, are you crazy? Okay?
Yeah,
they're defending a conservative company that doesn't want to pay anyone. It's like, that's crazy.
Well, you know, the thing is, Tom, and I am not a big union person at all, and I couldn't believe I was finding myself saying this the other day. A couple days ago, the Wall Street Journal had an article on just the cost of everything, the cost of medical insurance, the cost of food, the cost of this, the cost of that. And the average middle-class family, which is the backbone of this nation, they're getting crushed. They're getting crushed, Tom. And I thought to myself, at this point in time, the pendulum in the beginning of the 20th century, you know, was too heavily favored towards the corporation management, and the oligarchs that own the companies, the Rockefellers, the J.P. Morgans, and so on.
Sure.
And as a result, it gave rise to unions. And then I think about the 1960s, the unions had too much power, started wrecking the competitiveness of the companies, and they started losing power. And I'm about to find myself saying, and I am not a union guy at all.
Yep.
And when I'm finding myself, man, we need some unions in this country, because that's the only way we're going to get any wage growth.
You know what's so cool? What's so cool, folks, about we have to have this conversation across the country, okay? Because I was the exact same way. Totally. Do you know what I mean? I grew up in Boston. Unions are everywhere. My father was a general chairman of the New Haven Railroad. He was a signalman, and he was a signalman making $8,000 a year. So I know both sides of it, okay? Then I grow up, I look at unions. Unions are making $150. I'm saying to myself, that's crazy. So then I'm saying, that's insane. Now it has flipped the other way. There's no doubt. And what comes into play here, folks, is this. Two different things come into play. That people are getting taken advantage of. I know what the corporates are making, and I'm going to bring the military inside of it, too. Days in the military, I was, plenty of people were. Guess what? The people that are running half these companies never were in. They want to fly under the American flag. They want, when things go wrong, they want our troops to go take care of them, okay? And guess what? Then they come back and they get trashed too. It's like, you're going to be kidding me, okay? We wouldn't have what we have, okay, without people getting paid. Okay, it's driving me. Well, it's not, you get the gist. I can have this conversation with you and with everyone out here, but the bottom line is that people should get taken care of, man. You know?
Yeah, it's nuts. Hey, buddy, I appreciate you taking my call as always.
Have a great one, man. Have a safe one. You stay right there, folks. We're coming right back. Dow Industrials finished down 12. Nasdaq off 5. S&P's off 2.5. We're gonna be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back, folks. Dow finished down 12, NASDAQ off 5, S&P's off 2.5. And well, this is interesting. So we were just talking with Dave, and we were talking about the aspect of, we were talking a lot of different things, but I'm going to stay on the company aspect. And listen, I'm not blanketing all companies, okay? What I am doing specifically, though, is that we got to figure out how the middle class can be the middle class and pay for education, have a decent life, because they're doing the work, okay? Not just the middle class, all of us, okay? All of us. And one of the tigers in the den had put in the den, this is pretty cool, okay? I flew from Cleveland to Atlanta once for a yearly review and got a pay raise that was less than the cost of the airline ticket. So check this out. I wasn't even thinking of this when I was talking about, well, you know, pay raises and, you know, getting fair, just wage and all of this. Yesterday, I was talking with someone in Boston, and what was going on is that they had got reviewed, okay? You know, you work for big corporations, okay, you get reviewed. Bottom line, you do a self-review, folks, okay? So they did a self-review. Bottom line, as they're doing the self-review, everyone's turning in the self-reviews. They turn in the self-reviews. Simultaneously, what ends up happening is that, and this is a very large corporation, simultaneously inside what happens, inside these sectors, inside the corporation, 3 people get fired. Well, that did 2 different things, and I really didn't think about this till right now. When I was speaking with the person, I was explaining that is to put the fear of God in everyone, number one. But in that context, you can see how, to me, how companies work. Because what does happen is that everyone needs a job. We all got to make money. When you do work for larger companies, it's probably it's a cut and dry deal. Most folks know now that larger companies will cut you in a heartbeat, whether you're there 10, 20, 30, 40 years. So the fear factor in there is amazing. Now I want to go to the second part of what our tiger said in the den, because this is really cool. And this is what you have to remember, folks. You have to remember how important you are. You have to remember what a good job you're doing, and you have to remember what you're worth. And you have to fight for what you're worth, okay? And the second one, he goes, I remember times when my employer would say, take it, this is your pay, take it or leave it. Then when labor markets heated up, they couldn't understand why people would leave because they offered a better deal. What you want is that you have to absolutely understand it's a two-sided deal. And inside that two-sided deal, get those negotiation powers going. And it's a little bit harder for me to, I haven't been on that side, the other side, because I figured out when I was a kid, no one would hire me. So I figured out I better get my own job. And it has to do with, just a different thought process. That being said, though, what you want to do is have a clean conversation with your employer and say, listen, this is what I bring to the table. This is what I think I deserve. And then have them tell you yes or no, and have them tell you why. That's the way I'd shake it out. But those conversations should be taking place, across the country. There's no 2 ways about it. Because as what I've seen happen, and particularly this updraft right here, you still have the media out there saying on a continual basis, and companies saying on a continual basis that things are bad. Folks, I can pull up almost every single company. Companies are making money. They're making plenty of money. We're not asking that, you take all the company profits. What you're asking is a fair deal. That's what it comes down to, for what the hours are worked. Let's go, when we talk about fair deal as to what hours are worked, Europe. We'll go over to Europe out here today. Europe gave it up, folks. If we take a look at the FTSE was down 37 bucks. That's not the number. The DAX in Germany was the number. The DAX in Germany, what the DAX did, it went out, it was testing the high of September as well as the high going all the way back to July. And it gave it up, and it gave it up in spades. The DAX had a huge price spread out here today. It went from a price point of 10,083 down to 98.35. Okay, so you're talking some big numbers out here. 1.5% with volume. So now what the DAX is saying, did the whole counter trend bounce come all the way up to the top? The DAX is saying, guess what? We're going to run all the way back to the bottom of that range, and the bottom of that range goes down to October 16th, which is 8,300, and that's 1,500 points from where we are. If you happen to come over to TFNN, folks, coming December 16th is my 660th edition of the Gold Report. That's 12 and a half years. We have a special that's going on. It's only going on for 2 weeks. You can get 60 editions of the Gold Report. That's 60 weeks for only $10 a week. That's half price. You also get The Art of Time in the Trade, my book. We just got a new printing in. That's an $88 value. Check it out on the front page of TFNN. So it's $60 for $600 with a copy of the autographed book. Bottom line, the book is a great gift to give away for the holidays, too. And the book is an $88 value. When we do take a look at the gold market in general, bottom line, my take, you heard me talking to Dave, my take is that we're going higher. I really like what happened on last Sunday night to Monday. What you had is this, they couldn't knock it down. They couldn't get it below the swing point, and from high to low, from low to high, you went up $80. That in correlation of what the dollar has done. And we're going to get that confirmation real quick on the dollar. So tomorrow on the dollar, this is the confirmation on the dollar, and brings it a higher probability that the dollar is topped out at this point. The continuous contract is at 88.68 right now. A close under 88.51 would get you a close under last week's high, and that would say that, okay, now we have a pullback going. As that pullback takes place, we'll get a better understanding what type of pullback it's going to be. And the way we would get that understanding is that, do you have volume off the high? If you don't get volume off the high in the dollar, a normal pullback will just bring you down to about 84. You know, and the dollar just started out, folks, 7 months ago at 78. It doesn't have to go to 78. If it just pulls up at regular volume, 84 is the number. If it pulls back with volume, then what you can do is that you can pull back to the huge sign of strength that the dollar had on a monthly basis in September. That would bring you back to 82. I actually don't see, the dollar doesn't have to go back to that 78 at all. That's how this is shaking out right now. Inside the gold market, it's just the opposite. What we do have with XAU, the HUI, they're saying they want to go there. Royal Gold wants to go to the August highs. Franco-Nevada wants to go to the August highs. That's telling me that gold wants to hit that 1355. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. You stay right there. Man, Mr. Andy Heck's going to be coming up next. Growling and proud with your full hour, the Commodities Hour. Have a great one. Have a safe one. Look forward to speaking to you right here tomorrow. Go get him, folks.